Hi there, welcome to Kneppy Invest. So last week I did a video looking at my momentum sentiment portfolio, just the holdings I have within that portfolio. And I thought maybe it's a good idea just to give a week two update in regards to the performance and the makeup of that portfolio. So any changes I've had, any buys or sells, that sort of thing, and just look at the overall performance. And I'm thinking at this point or this stage that I'll do a weekly update in regards to the portfolio's performance and any changes I do make. So this is that week two update. Now, this momentum sentiment strategy I've had in place since about 2013. I still remember the first trade I made in regards to this strategy, and that was M2 Communications. That was one of those telecommunications companies back then. There was a bit of consolidation within the sector, and M2 Communications was bought out by Vocus Group, if I remember correctly. So a bit of consolidation, and I've used this strategy sporadically since then. And every time I've used it, the companies I've bought have done really well. So over time, I've just thought maybe I should be using this strategy more and more often. And it's really come to a head about June, July this year, when I thought, yes, I should be using this strategy a little bit more. So I've developed this portfolio of companies. Well, I'm going to be developing a portfolio of companies that I've bought using this strategy. And I've incepted or began this portfolio in August of this year. The first company I bought using this strategy was Bluescope Steel. And just like our previous companies I've bought using this strategy, it's done very well for me in the 3 or so months since then. In fact, it's up 40%. Now, all portfolios or strategies should have goals, especially those portfolios. And the main goal is to beat the market. So if I can't beat the market, what's the point in investing in individual companies? Just buy ETFs, because ETFs are the market. And my whole point, the whole reason why I invest in individual companies is to beat the market. So ideally, the goal of this portfolio is double market returns. Now, I think I definitely will be able to do that. I think that's a good chance I'll get close to do that anyway. Now, it's been a busy week with this portfolio. I don't have any mandates in regards to how active I'm going to be within this portfolio. So some weeks I won't be active at all. Other weeks I'll be more busier. So this is one of those busy weeks because if I had to say the ideal activeness of myself within this portfolio is maybe one trade a week at most. This week I had 2 trades. So I bought 2 companies this week, and those 2 companies were SG Fleet, which is a leasing company, and Mosaic Brands. So quite a bit of different companies here. One company is I'm quite confident about the long-term performance. The other company is a very high risk, high reward. I could actually see this company share price going through the roof, or possibly going quite a bit lower. So let's look at the first company, SG Fleet. So there's quite a few companies on the ASX in this field or this sector. And there's actually also quite a few companies not listed on the ASX. So I think there's 10 companies in the same field in Australia. So I think there's potential for consolidation within the sector over the next few years. And if there is consolidation, just like there was in telecommunications 6 or 7 years ago, I think that's going to be good for any companies that come out of that at the end of the consolidation period. Now, SG Fleet, I did have a look at all the 4 listed companies on the ASX. I looked at their financial status, how good they're doing, that sort of thing. And SG Fleet came number 1 for me on those 4 companies. Eclipse is another company, Macmillan Shakespeare and Smart Group. Eclipse actually scored quite well, except for one thing, and that was debt. Has a lot of debt. If it didn't have as much debt, I probably may have bought Eclipse. But SG Fleet, and the other thing I probably should mention is they all look fairly good on the technical charts. They're all in developing uptrends or have developed uptrends, and so that they all get a tick in that regards. So I bought SG Fleet a few days ago at $2.17, and the current price is $2.23, so already up. So medium confidence, if the share price keeps going up in an uptrend, that confidence will grow with time. Now, at the AGM in late October, they did give some guidance in regards to profit for this half of the financial year, and that's 22 to 24 million. So I always like when they give a bit of guidance, but that was double the previous half's profit and almost identical than the corresponding period last year's. And they also mentioned it's going to be difficult to give a forecast for the second half of financial year 21 because there's a lot of unknown circumstances happening. But I do believe SG Fleet, or this sector, is in some tailwinds. They've been in headwinds for quite a while, but some tailwinds are developing, especially in regards to used car sales. The demand for used car sales are going up, and supply actually is going down. So that's actually good for SG Fleet and other players within this field. Mosaic Brands. Now, this is a company I would not recommend to many people or many investors. I tend to be more risk taking than many investors, and I think this is a company where I can see a lot of potential of the share price just going through the roof. I mean, not even doubling from here, tripling from here, or quadrupling from here. Also can see the share price getting to zero. So fairly high risk in regards to this company, but there's a lot of reward moving forward. So I bought in at 80 cents because the share price did come back from 90 cents, and I think that's a bit of a correction, a small correction. It was a good time to buy because we saw a very similar thing in the previous breakout in October where the share price got to 70 cents and then the share price pulled back towards 60 cents. So I think we've seen a very similar thing play out this time around, and I thought 80 cents would be a good buying price, a good line or price of support. So I bought in 80 cents, current price is 83 cents. So I'm very interested to see how this company is going. But the first sign of trouble, I'm going to be getting out, especially if there's any sign of financial trouble. And just to let you know that I actually did do a video on Mosaic Brands and SG Fleet. It's in my, I think it was the breakout, companies on my breakout watch list. So I'll leave a link in the comment section, not the comment section, the description section of this video. So if you want to look at that video of Mosaic Brands, you can, and SG Fleet too. Now let's look at the companies I've already had within this portfolio. And the first company is Bluescope Steel. This was my initial buy. So I bought this in about middle of August of this year, just based off a technical uptrend or developing technical uptrend. And what we saw in October and November of this year was two profit upgrades, and those are my two favorite words. Well, you could interchange profit and earnings, but profit or earnings upgrade are my favorite things I like to read when I see announcements, because usually good things happens to a company's share price when that happens. So we can see definitely those two profit upgrades have seen the share price rise, and we've also seen those profit upgrades correspond to volume spikes as well. So I bought in at $12.34 way back in early August or mid-August, and the current price is $17.30. So 40% increase in share price since I bought in. Not much happened in the last week, so it's only gone up 7 cents in a week, but that's okay. Bit of consolidation is not bad for a company. We want to see that in some weeks because share price can't keep going up forever. We need consolidation. Next company is South32. This is a company I thought I bought a little bit too early, so if I do have to judge my buy on this company is a little bit too early. I do like to judge or rate my buys every time I do them. And South32 would have got a low grade because I think it did buy again too early. And the main reason I thought I bought too early was because the share price is going through is in a trading range, or was in a trading range. Actually, I should say it was in a trading range between about $2.32 and $2.02. And every time it got around $2.32 or between $2.27 and $2.32, the share price will pull back. And every time the share price got to $2.02 or so, the share price will start to rise again. Last week, the share price finished at $2.32, right at the top of that trading range, which I've shown with those horizontal blue lines. So I thought last week there was two possible scenarios moving forward to this week with South32. Share price will pull back because it's hit the top of that range, and we might see a share price move towards $2.20. Or if it broke out above that trading range, that will be very bullish, especially if there was a bit of volume. Now, at the end of last week, I thought there could be a developing uptrend. This is what I really like to see in moving averages when there's a developing uptrend. Also, we saw some really good volume. So those two things made me think there could be the beginning of an uptrend, but I really don't want to assume it is developing of uptrend until we get confirmation. And that confirmation would be what happened this week, which I'll just show you right now. Here we go. So we did break through the top of that trading range quite well on some good volumes. So I think this is the development of a new uptrend for South32. So share price has gone up to $2.43, only 11 cents or so higher than last week's share price. Weren't surprised to see the share price pull back towards $2.32 just to test that old top of the trading range, and that would mean that top of the trading range becomes support in the future. Costa Group. So Costa Group, I bought. If I had to rate this buy, it actually would be quite low too. So I bought this around about here. And this was I don't know why I bought here. So typically I'd buy around here on this sort of yearly report, but I decided just to be patient, and I thought maybe the share price would go sideways in the subsequent days after the half-yearly result was disseminated. But the share price kept going up, so I just thought as soon as the share price went down in a day, I'll just buy in. So I bought in around here. But even though I probably bought either a little bit too late or a little bit too early, because the share price did actually decrease over the next month or so, I thought, the share price is going to go up in time, and it has definitely gone up in time just because that half yearly was very bullish. You can have a look at my previous video and I'll explain why in that video. So bought at $3.60. Last week the share price finished at $3.95 and the current price is $3.98. So again, just like our Bluescope, nothing much has happened in the past week. Again, we're just going through a consolidation period, so nothing to be concerned at all with the chart or what's happened in the past week. So again, I'm very bullish about the long-term success of Costa Group in at least the next year or so. Red River Resources, this is a company I was umming and ahhing about whether I should include it in this portfolio or include it in my long-term growth portfolio. But I decided to put it into this portfolio simply because don't have the biggest faith or trust in management. So I bought this based off their quarterly report, which they had really good cash flow. So I bought that at 22 cents. Last week the share price finished at 27, and this week it finished at 26.5. So not much has happened in the past week, but some fairly bullish activity though. So it's fairly weird that I'm saying bullish, even though the share price has gone backwards a little bit. We have seen the share price go backwards from 30 cents last week, but even though share price is going down, we've seen a decrease, really good decrease in volume during that period, which is actually fairly bullish. That's something I really want to see is when the share price goes down, I want to see a really good decrease in volume corresponding to that decrease in share price. And that's a very good bullish sign. It just means, there's no one keen to selling out. And once those sellers have dried out, we will see some increased buying and the share price should go back up. Empire Energy, this was a company I bought because of this breakout in mid-October, early to mid-October. Really good breakout on really good volume. And the only thing is it's just been going sideways since that breakout. But I bought, my strategy in buying this, so if I rated this buy, it would be rated as almost an A because I did have some patience here. I waited for the share price to come back. So I bought it around about here, either this day or this day in these lower wicks. So this was something I just really waited for. I wanted to get back to about 35 cents. When it hit 36 cents, that's when I bought. Not much has happened since I bought it. A bit of upping and downing of the share price. But in the last week or so, the share price has gone up 3% or 3 cents. So almost 10% in the last week. So share price is now 41 cents. So again, this share price has gone up since I bought it, which is not a bad thing. So I'm pretty positive about the long-term possibilities of Empire Energy. but they're not a profitable, or they're not in production yet, but they are in the right sector. They're in shale in Eastern Arnhem Land. I forget what it's called there, the shelf, whatever it's called, but they're in the right area anyway. Michael Hill is the last company. So I bought this last week at 52.5 cents, and current share price is only 54. So not much has happened with Michael Hill, but this was sort of another buy based off a good technical upswing, which was based off a positive trading update, which is what I want to see. Share price has gone really sideways over the past month. It's traded between about 50 and 55 cents. Once it breaks above 55 cents, that's when I become more bullish. I don't mind seeing this sort of consolidation period for a company I own. In fact, I really like it because that shows there's a bit of strength with the company. The only thing if I had one slight concern about it, is just the lack of volume. But I think that will come once the share price gets above 55 cents. So that's my thesis on Michael Hill, is we'll start to see the share price go above 55 cents, and that will be confirmation of an uptrend. So last of all, I'm just going to give a bit of the performance of the portfolio overall. So you can actually see how many units I hold, my profit and loss in each company, and the percentage change. So of course, Bluescope Steel has been my best performer at 40% up. Also saw my largest holding. So Bluescope Steel, South32, Costa Group, and SG Fleet. I bought $4,000 worth of shares in those companies. Empire Energy only bought 2,000. So based off my confidence level is how much shares I'll buy, or the market value of the shares I buy within each holding. And this doesn't include the one company I have sold out of, and that was Treasury Wine. So that was a losing trade. I lost $900 on that trade. I bought it one day and sold it 3 days later. So I bought it because of good trading update. I don't think it was a trading update. It was the half-year or yearly results. And then a few days after the results was released, the market got excited about those results. And a few days after those results, that's when China accused Treasury Wine of dumping their wine into China. And then a few days ago, if you've been following Treasury Wine, China's introduced a massive tariff on Australian wine into China. So Treasury Wine's share price just dropped down to something like $9 or so. So anyway, so percentage change is 13.5%. So good performance overall since I've developed this portfolio. So I'm happy with the overall performance at this point in time, and nothing to complain about at all. So I hope you've enjoyed this video about the update in my momentum sentiment portfolio. If you have any questions in regards to how I've set up the portfolio, or if you think I'm an idiot for buying any of these companies, especially Mosaic Brands, and I might have to agree with you in hindsight in the future if something bad happens to the company. But otherwise, leave a comment, whatever, if you're a holder of any of these companies. If you want to add anything in regards to something I've missed, leave a comment. Do it. Anyway, I'm not a professional advisor, so even though I bought some of these companies, I don't advise you to buy them. You should use your own research to make your own decisions, because everyone has a different or should have a different strategy in regards to their investing. So anyway, I'm not a financial advisor, so if you do need financial advice in regards to your own circumstances, make sure you seek out someone who is qualified. So that's all for this video. Have a good day, and up until update week 3 of my momentum sentiment portfolio, I'll see you then. If not, make sure you watch my other videos, because you might get some good ideas out of those too. So have a good day. Bye. See ya.